board. The chair has requested some amendments to the bylaws that were approved last year, and one of those amendments has some financial impact that I just wanted to make sure was discussed at this committee for comment. We're not looking for you to approve anything now, but we obviously want your comments, because if everybody on the full board is okay with the bylaws changes, we will ask for approval in the full board meeting. The original bylaws that were passed had following statement, and I apologize for reading it, but notwithstanding anything herein to the contrary, the executive director may not, without first obtaining a written consent of the board, bind the authority by entering into any contract, agreement, or arrangement on the authority's behalf in excess of $2.5 million. And then there's a lot of language after that. We found that that isn't entirely clear, because we came to you earlier and got approval of a full budget that has very detailed line items. This year will be even more detailed. And it's not clear whether that really entails written approval or not. So what we'd like to do with these bylaw changes is set up a little more detail around the delegations of the board. In the material that you have, we have a table. There are 2 pages to it. The first is the delegated authority that we're recommending for budget, and that deals with spending. This is what we would ask you to delegate to us with regards to spending on budget items. And then the second page is on contract authority. So this talks about what we can sign with or without your approval and notification. So looking at the budget table first, which is on page 3 of your material, there are 4 different budget types. The first type is operations administration, which in FY22 is $5.2 million. This is our administrative costs, our payroll, our IT, our space, our contracts, those kinds of things that are not project related. Our proposal is that we would be able to redistribute line item budgets but not increase the total annual budget. So if we find that we're running ahead on hiring, we can take money from an IT category, for example, and move it to payroll, just in order to keep the budget flush. Obviously, if there are any major differences, we'd have to come back to the board, and we would never move something from a category that would then result in an underfunding. But we feel that this gives us, within a $5 million budget, the flexibility to manage the day-to-day operations of the authority. The second line item is operations passenger service. This is the money that we give to Amtrak and pay them for operating the railroad. It's split out by the different routes that we have. What we're proposing is that we can redistribute line item budgets from one line item to the other. And if we have to, if we have to pay Amtrak for service disruptions, or if there are other costs that were unexpected within the Amtrak budget, we're asking to be able to add budget to line items up to an annual limit of 1.5% of the annual operations budget for all line items. Anything greater than 1.5%, we would have to come back to the board. Capital grants are the grants that we give out to other entities to manage projects. That budget in FY22 is $80 million. We're proposing that we can modify those line items up to $250,000 per line item of the grant amount, or 20% of the grant amount, whichever is less. And then the annual limit overall for the $80 million budget would be 1.5%. Anything above that, we would have to get written board approval before we made those changes. And then finally would be the capital projects. Those are the big projects that we actually manage ourselves. That's the $321 million budget. And for that, we were looking for authority to transfer up to $5 million or 20%, whichever is less, of the receiving line item. Again, that would be a situation where we wouldn't be transferring from a project to fund another one, and then come back and say, hey, the one we transferred from is actually now short on funds. So we would have full transparency. At the end of or before every board meeting, we would present to the board and the finance committee any changes that had been made. So there would be full understanding of where the money has moved. We're just asking to be able to move these without coming to the board for approval. So any question on those budget delegations? I have the detailed budgets with the line items if you have any questions about where the money is now. But we feel that it's relatively conservative. And again, it's an ongoing conversation. You'll be notified every month with our monthly reports, and then in person at the board meeting of any changes.
Okay.
Great.
Very reasonable.
Thank you. And then the next page is a little more straightforward. This is what binds us. These are the authorities for contracting. I'll go from the bottom up. Any contract that we sign that is between $250,000 or $5 million, again, assuming it's in the budget, we would just notify you in our monthly report and say, here are the contracts that we've signed, here's what we found in the agency between 250 and 5 million. If there are contracts that we're signing, again, within the approved budget, between 5 million and 50 million, like I've done a couple times in the past, I'd send an email out about a week ahead of time with 5 business days saying, just for the board's awareness, the full board, a week from now, we will be announcing a contract that we're signing with CSX or with the contractor to do work that, again, is part of the approved budget. And then anything that's 50 million or greater, we just think it's important to brief the board ahead of time and get board approval 90 days before we execute that contract. Again, we think this is reasonable, but we just wanted to put it on paper so we all know the delegated rules that we're following.
Any questions to DJ about the delegation of authorities? It seems to be reasonable, and I think you have adequate disclosure made to the board and the finance committee of these changes as appropriate, and I'm glad that you have clarified the delegation of authority as was given to the administration to be more clear about the lines of delegation and the levels. Thank you for doing that.
Perfect, thank you. And again, this will be part of the bylaw changes that are presented to the full board by the chairperson.
Great.
Thank you very much.
All right, the next item on the agenda is our fiscal year 21 that ended as of June 30th. And we have an audit update by Ashley Nussbaum. Welcome, Ashley.
Hi, thank you. As you all know, we're in the middle of our audit with Terry Becker, trying to get through the end of the year audit. And we thought it might be a good idea just to give a brief, quick, high-level overview of some of our financial statements. And these are draft until the audit is finished. I just want to reiterate that it could change. These aren't final, so just keep that in mind. So the first financial statement we're going to look at is a statement of net position. And I won't go through every line. So if I skip something, please stop me and ask questions. But the first line, the cash and cash equivalents, the majority of our cash is invested with the LGIP at June 30th, about 224 million was, and the remainder of the balance, about 7.8 million was left at Wells Fargo to cover any expenses we have come through. And if we go to our accounts receivable line, that accounts receivable includes about 9.8 million of Commonwealth rail revenue that related to June that we didn't receive until July, plus about a $10 million credit that Amtrak owes us. And then if we skip down to the capital assets, the third capital asset down is obviously the most significant, that $535 million. And that's made up of the $200 million payment to CSX for the segment 1 right away. And it also includes about $6 million of legal and professional fees that we determined should be allocated to the purchase. And it also includes the anticipated payments for segments 2 and 3, the $325 million. And that leaves us with total assets of $802 million. Then if we skip down to our liabilities, they're pretty straightforward. We have our accounts payable for invoices we had in-house at 6/30 that we hadn't paid yet, our payroll, our accrued payroll. That due to DRPT includes about 1.9 million of administrative expenses where DRPT was helping to set up the VPRA. And then the $325 million installment purchase, obviously that's the $200 million for segment 3 that we're gonna hopefully pay out this November, and the $125 million for segment 2 that will hopefully pay out next November 2022. And that brings us down to our net position.
Bless you.
Bless you. It's a pretty substantial net position. We have our net investment of capital assets of 225 million, and then our unrestricted net position of 241, for a total net position of 466 million. And if we jump to the next slide. And so this is our statement of revenues and expenses and changes in that position. And if we start with revenues, in the operating section, we broke out the Amtrak, or the passenger ticket revenues from the Amtrak expenses and broke them out between operating, capital, and marketing, just to have kind of, I think it gives kind of a clearer picture of where what revenues were coming in and where the expenses were going. That also includes 2.7 million of the VPRA's, just general administrative expenses. And that left us with a net operating loss of 9.9 million. But when we compare that to the non-operating revenues and expenses, the first line, the 320 million, that includes the initial cash transfer in we got of 302 million from the Commonwealth. It also includes the $10 million credit road from Amtrak, as well as the Staples Mill parking lot that was transferred from DRPT to the VPRA. Commonwealth Rail Fund are our revenues we get every month. That's for the full year of FY21. The 74 million in priority transportation funds are for FY20 and prior. We recently sent an invoice to VDOT for the FY21 funds, so hopefully, fingers crossed, we'll be getting those soon. And then we had about 18.8 million of capital grant expenditures, which brings us down to our net position, which equals our statement of net position of 466 million. Does anybody have any questions?
And we're not going to have a comparative financial statement since FY21 was the first year of the operation.
Exactly. Next year we'll have 2
Gotcha.
years.
Any questions to Ashley? Comments?
I would just add that we are going to do, the final audit will have a classified balance sheet or statement of net position. So we'll have current assets, long-term, current liabilities broken out.
Okay.
Just for ease of presentation, we chose not to add all those extra lines by breaking those items out.
Great.
And the due to from DRPT, that will settle itself out over the next few months as you settle out the administrative expenses and office rent and everything else that has been, okay,
2.98.
yeah.
Have we paid all that?
Mm-hmm.
Okay.
Yes,
Yeah, I imagine that's been cleared by
Yeah.
now.
it has.
Good question. Any other comments, questions to Ashley? Thank you. This was a
Thank you.
thorough report and
Thank you.
good first year closure of the financial statements.
Duck out, I'll see you guys in the
All
full
right,
meeting.
yeah, absolutely. We'll see.
All right, see you later.
at 10, yeah.
See you, Jonathan.
See you again.
Well, Shannon.
I'm gonna support here, you guys.
That's right. You have the next
I
item,
have
the
the-
budget for FY23.
Yes.
And the changes to FY22 budget
Exactly.
amendments.
So we're going to be walking through our plan for the FY23 budget, as well as a possible amendment we may consider pushing through to the FY22 budget. To kick us off here, we're going to start with the budget timeline. I apologize, this PDF's a little bit funky here, but we'll just walk through the process. This is at the higher level, the board level. So we started the kickoff to the budget process in August in anticipation that we'll need to present the budget to the board on December 14th for comment, and we'll turn around, make any adjustments we need to do, and then we'll present it again in January 25th to get approved. From there, the budget will go to the CTB on February 1st. We'll present it on the 16th, and then they have until April 15th to provide us comment. Again, we'll revise the budget and provide the amended budget to both the CTB and the VPRA to be approved in May. So quite a bit of turnaround on the budget. In addition to the higher level meetings, we would like to meet back with you all in November before Thanksgiving. We'll pin that date down a little bit later to get you guys an understanding of what the draft will look like as we're formulating it, to make sure that we get your input along the way. And maybe later on, we were gonna see if maybe we want to meet in October too, but maybe we'll run through some of our plans for the budget and then we can decide if we would like to do that October meeting as
Right.
well. Any questions on just the timeline and how that'll play out?
And just refresh my mind, last year, when we submitted the budget for FY '21 to CTB, did they have any changes, suggestions for
They had a
amendments?
couple.
Yeah, they asked us to amend for, if you recall, we came back in May, they wanted us to add some funding for ADA.
That's right.
That's right, for the stations.
That's right. That's good.
I think it was about $6-7 million. It wasn't
Right.
significant compared to the overall budget.
Great. Thank you.
We can assure you that this year's budget will have sufficient funding for ADA stations.
That's right. Good.
Great. So the next 5 slides here, we're going to talk through some of the plans for our FY '23 budget, starting with the concept of cash accrual. So in the last budget, as we're coming kind of branching off from the state authority, the state does everything on a cash basis, but now we're moving into an accrual reporting framework. So we're trying to devise the best plan for our budget going forward. The primary thing that we're considering is moving to a full accrual basis for monthly reporting. So and our executive director reports will continue to do the budget to actual. Right now, there's 3 of us in fiscal. We're operating on QuickBooks rather than a full ERP system, so doing full accrual accounting at the end of each month can be incredibly burdensome, and the value it would really add to the budget to actual seems like it wouldn't really outweigh the cost it would to do that process. So we're coming up with this proposed monthly expense accrual check. Essentially, what we're trying to prevent is 6 months down the road, we have a budget line item that has no expenses because there has been nothing billed. And all of a sudden, we get a bill for $1 million and we're over budget. But we didn't know that 6 months leading up to it. So hopefully this would kind of help us mitigate that possibility. So what we would do is take a population of everything that has a remaining balance of $100,000 or more for POs and then grant agreements. Take that as our population, review that. Anything that hasn't been invoiced in the last 60 days, we would work with the project manager, the vendor, the grantee to determine how much is outstanding related to service and costs. And if it exceeds $100,000, we would go ahead and accrue for it so that we're tracking that in our budget on a monthly basis. Any suggestions on that? Are we okay with maybe that process for the time being until we get ramped up to do a full accrual accounting? Yeah.
Well, I think it makes sense and minimizes the amount of effort that you have to do manually.
Yes.
And on the other hand, it really is a $100,000 threshold. It's going to capture quite a bit of accrued expenses that would not be reported otherwise on a cash basis.
And I'll note, at year end, we will do full-blown accrual accounting like we did this year.
That's right.
But this is just for the intermediary touch points.
Sorry, Jim. Do you
Well, I
have
was
a
just wondering, when you believe you're going to go to full accrual counting? When will you be able to do that?
It's a wonderful question. Our goal would definitely be once the ERP system gets up and running, because that will be a huge lift. I don't think we have an exact defined timeline on that, but if it's something that we're concerned about, we can start pinning that down and to get a date for you guys to determine when we would like to do that.
And I guess circling back to our
Yeah.
previous conversation on delegation too, how are we going to track changes in the line items that are made under the delegated authorities?
Yes, so that, there'll be a monthly, in the same executive director's report, we'll have a spreadsheet that every
Okay,
single
so
change
that-
that goes through, and it will go into that exact process as
Okay.
well. And that's more like the entire lineup, so the individual budget likely would stay the same. However,
Right.
all the overall budget changes would come through. It would just be another page in that report
Yeah.
that we provide to you guys on a monthly basis. as well.
Forecast versus budget?
Exactly,
Yeah,
exactly,
okay.
yes, exactly. Great question. Okay, so the next 3 slides, we are obviously going into the budget process, and there's a couple things that we would like to change in the upcoming years, the structural changes to how the budget is presented. One of them being the Amtrak detail. Obviously, this is the core of our business, really. That's why the Passenger Rail Authority was established, was to really do the passenger service. So we would like to drop this down a level. So in the prior budget, it was higher level for the routes and primarily to show the expenses. This year, we would like to drop it down, and I apologize, it's a little blurry, to the individual revenue streams and also the expense line items by route so that we can get more meaningful data and determine if train service revenue on the Roanoke service, and it's actually Lynchburg, is doing well and what it's tracking against for each of the different milestones we're creating. So this is what we'd like to do for the Amtrak operating. We could build it out more. I know some other states do it even at a more granular level, but we figured for this current year, it'd be great just to at least drop it down to the revenue and expense by train.
Yeah, these capture the main categories of revenues.
Yeah. And if we move through and you guys determine that you want to see a time or a lower level, we can definitely continue to improve this reporting tool. Okay. On the next slide, similar, so this is, we're hoping to get a lot of feedback on this one and the next one as well, just to determine what we want to see. So for administrative expenses, I've put together just what was in the prior year budget and the categories we looked at, and then a potential option that we could do for the current year budget using actuals, so you can see where the numbers actually fell out if we were to do this. You guys are a wealth of knowledge. We would like to hear what you would like to see for administrative expenses to be using as our benchmarks throughout the year. What have you seen at other entities? What have you liked to see? Using just obviously our example maybe as the underpinning idea.
No, I imagine the payroll really captures the benefits as well, so it's direct salaries plus benefits.
Yeah, so just do the one payroll line rather than breaking it up. Okay.
So let me make sure I understand.
Yes.
What you have on the right is what you're proposing?
It is, it's not necessarily a proposal, it's just
Or
more
just
an example.
throwing out there
Yes,
for-
exactly,
okay,
yeah.
for us
Exactly.
to,
It sounds like
comment on.
maybe putting payroll back
Yeah.
together. Some of the other things, so outside services, that really could be anything from, I mean, when we do an ERP system, we'll likely have to have a consultant come in and help us get that put into place, likely that. When we have KPMG helping with some of the financial models, that might fall into that category as well, possibly some feasibility studies. So we would expect that to likely go up in the budget this year. IT, obviously, is going to be just computers and our networks and all the things that go along with that. Employee costs is one that we would expect probably to pick up this year with travel, other employee cost licenses that we'll be getting for different individuals. So that would be expected to pick up as well.
So the question I would ask, I think part of the reason to do, pay attention to categories of expenses is how useful it is for you folks in managing those expenses, right? So it's equally important for you to,
Yes.
lay out the expense in a way that would be more useful and helpful to you.
Right.
Not just the board, but also.
Right,
Yeah.
100%, yes, I 100% understand. So, and with this, we'll likely, in our tracking mechanism, this is what will be reported out in the director's report, we'll have it go down at even a lower level when we're using in our spreadsheets to determine, like, when you're looking at other employee costs, it will be travel, it will be licenses, it will be other benefits that we offer to the employees. Similarly, for fringe benefits, it will get down to the granular level of everyone's health care and what we predict it to be based on just the number of employees. So it will get down to that level, but for reporting purposes, we'll probably aggregate it back up.
Yeah.
But still hopefully have a good metric that we could see if we're falling off course on something and forcing us to investigate why.
Let me assure you that internally, we are tracking it at those levels. In fact,
That's great.
talking painstaking detail, level by level. We just don't want to inundate the committee with details that you all don't find necessary. That's what we're looking for, is how high we should bring it to reporting.
That's
We're certainly
great.
not going to stop reporting subcategory by subcategory.
Right, yes,
Versus
yeah.
the issue, right?
I'm immediately putting my IT hat on, going, well, let's see, there's hardware, software, network.
That's right.
And by the way, capital, because that whole ERP is, I
Yeah.
guess would be capitalized
Yes,
initially.
yes,
So-
exactly.
So, yeah, but I'll back off, I think this is fine.
I think what would be really useful for the board is what is behind these numbers
Yeah.
as part of the budget exercise.
Yes.
How do we benchmark salaries? What is our
Yeah.
compensation philosophy, for instance? Are we remaining competitive? It's not really reflected in how we categorize expenses, but, what is behind some of
Yeah.
these budget items.
100%, yes, I understand that. Okay.
This will be an iterative process.
It will
As
be.
you put it out, and someone will want to see something else. and
Exactly. That's why we were hoping to get ahead of it, just in case
Okay.
there was anything real particular that somebody wanted to
Okay.
see. But no, that's perfect. And we'll
Okay.
make sure that we come prepared with all of the backups so that we can dive into
Yeah.
those details
Great.
at our next meeting. Okay, great. On the next slide, what we would like to include in the current year budget is a uses and sources table that would really just be for the current year, and it would show, okay, this is what we budgeted for our operating expenses, capital grants, capital projects, and this is how we're gonna fund it in the current year. And the sources of funding kind of aggregating them to a higher level just so it wasn't overly detailed. So we would have our Commonwealth Rail Fund revenues, and this is how they were going to be utilized. VPRA partners, this would be Amtrak and VRE. This is how these funds will be utilized, and then Virginia state funding, initial cash transfer, PTF funds. One thing that's not on here that we will end up adding this year based on what we're finding with federal dollars is that we are going to have federal spending in the current year. So that will be another column that we'll add into this too. I figured this could just add a level of detail to kind of show for the current year how we're anticipating funding those projects.
And I'll just add here, I think last year y'all wanted a little more information on the revenues, so we're trying to give you that, but we also, I'll say this, the allocation of the revenues to particular projects is very fluid, for lots of different reasons. So that's why maybe these broader categories is what we thought would be a better approach than rather literally getting into Amtrak funds, BPRA, CRF revenue, FHWA funds, CMAC funds, rather than going through all of that, and then it's sort of, held to that versus having the ability to move that funding around. So, but at the same time, I know y'all wanted more information, so I think this sort of gets to that middle ground of providing more information, but also not putting a document out there where one of our funding partners thinks that, hey, it was in the budget, you were using our Amtrak money on deciding F, and we ended up deciding we could be better use on deciding A through C. And that's not doing anything inappropriate. The contract's written that way with Amtrak. There are 10 qualified investments. We can move the funding through on any of the 10, as long as in total we don't exceed a certain percentage. So, just trying to thread that needle to give you the information you're looking for, but at the same time give us that flexibility.
Well, see, I find this really helpful, especially adding the federal column. Like if you say Amtrak fund, is that federal funds?
Yes, it's going to
Okay.
count as federal.
And what if you get like COVID relief funding? There's a lot in there. How would that be counted? Is that all just federal?
The COVID relief money has been a little unique because Amtrak credited to our bill. So it didn't actually show up on our statements. I guess.
It's a kind of a counter expense, right?
Exactly.
Yeah, reduce the expenses and increase the revenues flowing back to, so it's like an ordinary income as opposed to a grant funding.
Yeah, I mean, it was unique the way they did it this
Yeah,
year.
interesting.
They credited it, the first group of funding credits, they just credited our bill expenses. The second group, they're handling a little different. So I can't really say whether we put it in federal or maybe other partner revenue, the BPRA partner column. I think it's something we have to work through with Amtrak, because honestly, I guess, as you mentioned, we want to show, in our financials, we're going to show the Amtrak revenue, and we're going to show the total expense. The way it's been actually working in years past is we just pay the net amount. So they just send us a bill for the net amount. But for 2 or 3 years from now, when we actually want to go out and bond against those revenues, we need to show the history of those revenues, and we need to establish this year in our audited financials that those are our revenues. We've got a little bit of work to do with Amtrak to change the contract to get them to send us those funds. But with DJ here, I'm sure we'll get that done. So, and further, I'll say, during when we're working through the $944 million funding agreement with Amtrak, it was discussed at that time that we would be wanting to receive all of the passenger revenues, but as part of that whole agreement, it wasn't as important as the agreement itself. So it was discussed. They know they've agreed verbally to do it. We still got to get their finance team to be willing to change the process and trust us that we will pay the full expense. But anyway, as we go through that, I think we'll have more clarity to answer your question, where we'll record those credits. And like I said, they got 2 different things, relief funding, and they recorded them one way the first group and then another way the second group. And so, anyway.
So
Maybe
it's
there'll
an
be some more.
opportunity for process improvement going forward.
For Amtrak.
That's an understatement.
If we have a clear understanding, train by train, how much Virginia passengers are bringing from a revenue point of view, it helps us with pricing and it helps us with as we try to make service changes and
Sure.
schedule changes.
Sure.
It's just information that we need to have to run as well.
Yeah.
Great.
And would it be the first time any state would be bonding against their Amtrak ticket revenues?
To my knowledge,
Okay,
yes.
So we got to get Amtrak to come along with that.
I mean, initially, their senior management agreed. And then Mike and I started having further calls with their financial team. And I think at that point, we started the conversation, but then the Amtrak agreement kind of morphed in a different direction, so it wasn't as important. So, I feel confident that they've agreed to it. Getting, when you actually put pen to paper, it isn't always as easy, so. But I don't think, we looked at some other states doing our financials, and they record the full revenue amount, so I don't think it's, from an accounting principle standpoint, I think we're on good ground. So it's just a matter of, I think, Amtrak to me, and BJ, you can speak to this, they're just like me, they're very conservative as far as wanting the cash in hand, and so it's a matter of convincing them that when you flip the switch, we will pay the full expenditure amount, and in fact, you can wait to send me the revenue until you get that. And so I think talking them through that and convincing them that that's the way it'll work, anyway, it's just change for them. And they like the idea of having the money in hand. So.
I agree, though. They're a strong partner, and they know why this is important to us. I'm confident we'll be able to get this done.
Well, hopefully, going forward, it's not going to be a problem every year. I mean, we'll get through this crisis, and then you can work out in writing how it's going to happen when things are normalized. And that ought to be fairly straightforward and clear to everybody, I think, right?
It's a one-time change, I agree.
Right.
Yeah.
It's a good question, Pat. Very good question. Yeah. Well, we look forward to hearing more about the streamlining the process with Amtrak on recording of the revenues and payment of the expenses. And I think to your point, it's really important to do the accounting part of it correctly as a basis for a potential bond issue down the road. It's really important to, count all the revenues coming in and record all the expenses going out on your books. Great. Any other questions, comments? I guess,
On this one, no.
Shannon,
We could also
back.
move on to the last slide here.
Back, yeah.
As I mentioned in the beginning, there was a couple of items that were not known at the time the FY22 budget was approved. The big one obviously being the Western Rail Initiative, where that agreement is moving along nicely, but it's not currently in the budget. There's been some legal expenditures related to it, so if you looked at the last executive director's report, those expenses were in the budget, but there's no budget for it. So possibly opening up an amendment to push that through, come up with a budget number for FY22 so we can be tracking against it. And then we started talking about this and we said, okay, if we open up the budget to do this, maybe we take the opportunity to fine tune these other two expenses because we have a lot more knowns related to them. So administrative expenses, obviously we have a lot more information and data about the staffing levels and what that's gonna look like, so we could definitely fine tune that number. And then also Amtrak again, so they actually got CRISA funding, now that the COVID relief CARES funding has dried up, now they have CRISA funding offsetting much of their expenses. So we had projected these expenses that are actually gonna probably come in a lot less as well. So we could potentially update that as well. But it just depends on your appetite for doing this budget amendment. We would likely do it in the December meeting. We could provide you guys with an update the November meeting if we wanted to go down this path, but wanted to see your thoughts on it.
Yeah, my initial reaction to any sort of budget amendment is, once the budget's in place, it's just the budget and you leave it alone.
Yeah.
On the other hand, provided this is not an annual exercise or 2 or 3 times because then you start losing track of where you are financially. But these are big items. And I think as long as the Finance Committee and the board understand exactly what it is we're adding or changing,
Yeah.
I think on a one-time basis, I don't have a real issue with it. On an ongoing basis, I would have more of an issue.
Right.
That we can't continue to go back to the budget.
Very good.
I'd also add that when the budget was initially presented, the IFE area had approximately 0 employees, so there was a lot that just wasn't known.
That, and I'm giving you grace for that.
And I'm
Exactly.
gonna add, Deb, I completely concur that to me, this would be like this year only, and really
Yeah.
mostly because of Western Rail initiative.
Right,
It's-
right.
It's such
It's a big
large
number.
and
It's a big number,
It's
yeah.
not in the budget, and as y'all just heard DJ's delegated authority, you know,
Right.
everything we do with Western Rail, we're gonna have to come back to you because it's not in the budget. So
Unless
that
you-
whole
yeah.
delegated
Yeah.
authority is really pinned in, you've given him this authority in the budget, and now it's reporting back to you, or when we deviate, asking for permission, so
Yeah.
I agree. I do not want this to be, do not think it should be, we set a budget, we should live with the budget, but because of that one item and the size of it, I think it makes sense.
Well, I think the CRISA funding as well is, that's something else. It's a one-time, and so, and it's going to have an impact, and it may obscure what's actually going on unless we.
No, did Amtrak get AJP funds in the March bill as well, or not?
That does not sound familiar, but
Okay.
we'll circle back, because I do not know 100%
Okay.
up on that.
Yeah.
Because there were 3 COVID relief
You
bills.
call it AJP.
American Jobs Plan, wasn't what it was called?
Okay,
The
okay.
big, Biden's big bill right after he got in.
Yeah,
We'll look into
The
that,
first
yeah.
one, the one that passed, yeah.
To
They
add-
haven't,
Okay.
they haven't given us any indication that they were getting more credit, so.
Okay, all right.
But we'll check.
Yeah.
To that point, this Thursday, I don't want to sound political about political discussions going on the Hill, but are we tracking the infrastructure funding and how that's going to overlay with the potential budget if that bill passes?
We have, Andy's very involved in that, so he's been
Okay.
tracking that, so the movement.
Great.
Whatever comes out of that will be in the know.
We're watching that, and then, of course, the CRISI funds were just released. And
Sure.
we've got to
Yeah.
look for projects to apply for those.
Yep, yep.
Potentially, great opportunities coming for us. Of course, great challenges,
Wonderful.
because there's a lot of money that could come out, and a lot of demands on labor, and it's going to be an interesting moment.
Yeah, great.
But we are watching it.
Our lobbyist is telling us that nobody knows.
That's right. That's it. Kick the can down the road.
We're all hopeful.
Great. Any questions, comments to Shannon? Shannon, this was great.
Thank
I
you.
appreciate
Yeah,
the
very helpful.
wonderful
Thank you.
presentation. Welcome aboard.
Thank you
That's
so
great.
much. No, quick question. We did possibly thought the idea of doing an October Finance Committee meeting. Would you guys like to do that in addition to the one in November to talk about the draft budget? Maybe, I mean, it depends on, I know there'll be a lot of meetings between here and then.
Yeah.
If we do wait till November, it would be the draft budget and then also the amendments that we would present to you guys then. If we wanted to split it up, we could do that as well.
Yeah, we'll leave it up to you and
Okay.
DJ to decide if you need our help. We'll be happy to
That's perfect. How
step
about,
up
yeah,
on-
that sounds
That's
great.
All right, well, we've left the best for last. Steve, you're the last one on the agenda, or
Sit here.
investment policy. I know you've worked very hard on the policy, and you had reported about this at the last Finance Committee meeting in May, and also presented to the board. But you now have the final version of the policy, and we look forward to hearing about it.
Well, thank you, Hussein. So first, before I jump in, I just wanted to thank my team, Ashley and Shannon, and I wanted to get them in front of y'all today so y'all can see the great team that I have. Hopefully, I think I put it in last month's director's report that, you know, if y'all need information or looking for some answers, I want you to feel free to reach out to them or me at any time. So, thank y'all. So, that being said, I guess in June, I don't know if y'all recall, but we talked about the investment policy at the board meeting in June, and I kind of did an outline of what should be in the policy. had the Wells Fargo team came there with me, and they spoke briefly. So anyway, today I'm hopeful that today that we can talk through the investment policy in detail with y'all, and then take this policy to the board later today and hopefully get it approved. So the first thing I'll say on this first slide, I'm not going to read every word. You know, obviously we want the purpose. You know, we're going to have large sums of funding, and timing that funding up. You know, our goal is going to be to try to receive our funds as fast as possible, and then obviously we need to match those funds up to the expenditures of capital, of those capital.
So liquidity is really
Liquidity,
important.
yeah.
And I will say the history of our rail projects is generally, they tend to lag our estimated timing of the actual capital construction. So, anyway, that being said, we're probably going to have some cash balances at times. And so the goal of this investment policy is to try to have some investment earnings, but not at the expense of maintaining capital, preserving that capital, so, and not at the expense of liquidity. So
Yeah, we have to protect the principal for sure.
exactly. And my next slide will get into those objectives. But I also, on this slide, I really want to make y'all feel comfortable that this policy is in conformance with the SPDA, Securities for Public Deposits Act, and the Investment of Public Funds Act. So both Code of Virginia stipulated policies on investing public funds. So it's in compliance with that. I also had the Department of Treasury review this policy and give me their feedback, and they really didn't have much feedback. They have one or two small items that I incorporated. So that being said, I want y'all to feel comfortable. This is a very conservative policy. And I think at the end, the last slide, you know, over time, once we get our feet on the ground and we match the capital expenditure plan up with the funding that we have come in and get a better feel for that timing, I think this policy, I think we all need to realize will evolve, that we may come back to you and ask y'all to potentially alter some items in it. But for now, I wanted it to be very conservative. I think every credit rating in here is AA or higher. So that being said, we'll talk about the objectives. This also delegates authority to my team and I to carry out these activities for y'all as a board. And then there's also various reporting and benchmarking requirements in the policy. So next slide, please. So these are the objectives, and once again, I'm not going to read each word, and these are in priority order. So preservation of capital, safety of the principal is number one. Meeting our liquidity needs is our second objective, and then third, obviously, is to try to maximize our return. So, and then we did get feedback back in that June meeting that wherever practical, that I had to kind of say that because when we're investing in treasuries, securities, there's not really an ESG component to that. But when we get to corporate bonds, corporate notes, there is some possibility there that we could have that ESG principle involved in that type of investing. So that's where we've kind of said that is our desire, that if there's a possibility, we will look for that.
I'm glad that you have really mentioned that in the policy, the impact investing. Even if we don't have the opportunity to do that, just as a value proposition and investment policy is a good statement to include in the policy.
Yeah. And there may be, if down the road, like I think in here we have AA for corporate notes,
yes,
corporate bonds, and that's going to limit us to pretty much the financial sector only. So there may still be a little bit that we could do there, but if we lower that rating to an A rating,
sure,
then maybe that opens the window up a little bit. But anyway, that's down the road and as the policy evolves. So next slide, please. So this slide just lays out the various roles and responsibilities. Obviously, it's the responsibility of the board to adopt the policy and obviously to modify it over time. The finance committee, is laid out in the policy. Y'all are charged with reviewing the actions of myself and my team as far as carrying out the policy. And part of that would be having regular meetings and us providing, I think there's quarterly reporting, as well as in the director's report, we'll be doing monthly reporting also. And I think we all need to understand that over time, we're doing a director's report today, and a year from now, I expect it's going to look a little different. We're going to have better data, more data, and so I think it's the reporting cycle that's important here. This also lays out who's charged, the charges for myself, my team, as far as carrying out this policy. It also gives authority to engage an investment advisor and investment manager. And I guess if y'all recall, when we did the banking services RFP, we actually included this as an option in that RFP, knowing that we might have balances available and knowing that it might be something we would want to do down the road. So this policy does allow for that possibility. So.
To the extent that we do engage external investment advisors, would you anticipate then that they will report to this committee on a somewhat regular basis? Not every meeting, obviously, but
I think it would
annually
be,
or semi-annually?
Yeah, or maybe even to begin with, I think part of that quarterly reporting that I would envision them being a part of.
Because that can be just very helpful, just to make sure that we're aligned.
Yes, and I think I would hope they would want the feedback too.
Yeah.
And I think the other thing here is to, Ashley just showed you I'll call it a balance sheet, statement of net position.
Used to be balance sheet, that's okay. That's still called that.
Showing my age here. So, and it had $235 million roughly of cash and investments, if I'm recalling correctly. And so the question here is, okay, of that $235 million, what are we talking about potentially for an investment manager? Well, our benchmark in here is the LGIP fund. That's where a majority of those funds today are, except what's in our operating account. We've got a $200 million payment that you heard about staring us in the face in November. Those funds are staying in LGIP until we need to send them out the door to CSX. So, and I think today maybe we're closer to $250 million that's built up. So we're talking somewhere in the range of $30 million that maybe initially we might be looking to give to an investment manager, to apply this policy to and see if they can do better than the LGIP is what this benchmark is. So anyway, I just thought it was important somewhere in here to talk about that I didn't want y'all to leave thinking we were going to send $200 and some million beyond where y'all had. And I don't know, hopefully y'all remember that you kind of gave me authority to put the funds into LGIP.
Yes.
Okay. So next slide, please. So just diving down a little bit further to say exact, and hopefully y'all got the policy and maybe had a chance to look over it. And so there's a lot of detail of allowable investments in that policy. But at a real high level, it's basically U.S. short duration fixed income instruments. That's essentially what we're investing in. So the credit ratings are AA or higher. For pretty much, if you go through the list, that's what you're going to find. Maximum maturity of 5 years. We're really looking at probably like 6 months to 9 months for the portfolio at this time. It doesn't mean we won't have a single investment that's 5 years, but the weighted average maturity is going to be closer to 6 to 9 months. It's just, right now in the market, that's what makes sense. And obviously, the weighted average maturity can't exceed 2 years, and that makes just logical at a high level sense that the reason we have these funds is to put them into capital investments, not to put them in the stock market or into fixed income securities to make interest. And finally, there are concentration limits that limit both the type of investments, so corporate bonds, corporate notes, we can't take overall sector. We can't, I think it's 25% total in that sector. And then within a sector, there's also the issuer limit as far as we won't take that 25% and buy one corporate note of 25%. We're also diversifying from that perspective. So, and all of that is to limit our risk of the total portfolio. Those limits don't apply to the U.S. government securities, so Treasury bills, and then the LGIP program.
10-year Treasury is up to 1.45%. Yeah. It's not a bad beat.
Yeah. Well, that is essentially our benchmark, is the Treasury, 90-day Treasury and the LGIP. And so hopefully we can exceed that, but we shall see. So next slide, please. And this just takes what I was just talking about, the last bullet, that concentration risk, and breaks it down. All this is in the policy, but it just takes you through the different allowable investment, and we call it sector, and then what's the limit of the total that's allowed for that sector, and then within that, the individual issuer limit. So once again, all of this is designed to limit our risk and follow those objectives that we stated earlier. So next slide. So these are I've talked about this a little bit, the benchmarks and the reporting. So, I want to once again say I think this policy will evolve, but to begin with, we're going to use the Fed's fund rate and the 90-day T-bill rate as our beginning benchmark, and then we're also going to track internally. I think y'all may have seen in the director's report that we're talking about the LGIP rate that pool is paying. And so we're tracking that also because really with the way this policy is set up, they're going to be somewhat comparable. The quarterly report we talked about to the Finance Committee, and I envision this first year that the investment manager advisor will be part of that. And then maybe ultimately it becomes annual. I've been on another board, and it became more of an annual thing. But I think us tiptoeing into this, I think it'd be important to have them here and everyone to be comfortable more often this first year. Monthly reporting, as we talked about, that's going to evolve throughout the year. I think hopefully we can give you more and more detail in that report and better information. And then the one last thing I did want to mention in the policy, if by chance we get to an instrument and there is a downgrade on that instrument, so if it goes from AA to single A, then there's a requirement to notify y'all immediately, and then obviously at that point there'd be some discussion on what action we may or may not want to take. This was the one item that Treasury actually recommended changing. I had originally written it that we would within 30 days liquidate and get out of that security, and they felt like it would be best to allow some discretion because there may be a perfectly good reason to stay invested into that instrument and allow some time to play out.
I read the policy, and I can't remember if it also provides the discretion to the CFO to go ahead and take the action and then notify the committee. Is that one precedes the other? It seems to me that it might be appropriate thing to give you the discretion to act immediately. Sometimes these things change overnight.
That's a great point, you're saying.
But
Yeah,
Yeah.
that's a very good point.
Because it could be that the timing is more important the other direction.
yeah,
Right.
so that's something to consider.
Depends on the reason for the downgrade, yeah,
Yeah,
and it might be,
exactly.
yeah.
And we need to move quicker than
Yeah.
Yeah.
waiting for the.
And waiting
Exactly.
for
It's just you have to
Finance
get on the
Committee and
phone and
board
say
approval,
to
yeah.
your broker,
Yeah.
get rid of this.
That's a
Yeah.
great point. So next slide, please. So this is just, as I've talked about the policy evolving, these are just some of the items that, some of the feedback I got. I also talked with the investment manager about this policy. And honestly, I probably tightened stuff more so than adhering to their advice. But some of this on this slide is a little bit of their advice, and I've looked at other investment policies, and so this first item here is like, maybe we could down the road expand the allowable investments, and there's something called SSAs, and what these really are is it's foreign government debt, and it's all rated through Moody's and S&P and Fitch. So you're looking at a Sweden issuing some debt, and we could invest into that. Still apply the same credit ratings, AA. But for now, the policy is written U.S. only. So, and this is just for y'all to think about, and us over time to consider, allowing a little more flexibility. Another item was asset-backed securities. I'm not as, put it on here. We need to talk about it, but it's essentially these are car loans and credit card loans where they sort of take like how mortgages are put together and then sold. Well, the same thing here, and they peel off the top 10%, let's say, of those creditors, and you can buy into that level. But I'm not as enthused with that, but I still thought we need to at least discuss it. And then the credit ratings, that's another area, as I mentioned earlier on the corporate notes, that right now we're pretty much limited to the financial sector. But if we drop that credit rating, it'll open, to an A rating, it would open the door a little bit there. Also, bond proceeds, there is some information in the investment policy. When we issue debt, we obviously have to manage those proceeds so we don't fall under arbitrage and have to pay the federal government. So I put a little bit of those policy items in here, but when we get to the point of issuing debt, we're going to need to revisit that and make sure we're definitely on point. You do not want to.
Generally, you would have an arbitrage reporting folks hired annually to do that testing, and
Yes.
You're not to exceed the cost of debt when you're using public funds to fund projects.
Yes.
And arbitrage and your investment revenues. And there's a specific reporting requirement to the IRS on an annual basis.
Yes, and like I said, I touched on it. I didn't.
Yeah, good
Until
point. It's a
until we
very
get
good-
closer. And,
The compliance issue.
There's a
Yeah.
potential tax liability that can
Exactly.
really trip you up if they're not,
Exactly.
yeah.
And the last thing here was just, we're going to obviously get a lot better at knowing when the expenditures are going to occur. So our capital expenditure plan will get more refined as our agency builds out, and then we'll also know better the timing of receipt of funds. I think I saw an email yesterday, or maybe it was this morning, that Amtrak's been really good. They're pushing to start their payments to us of their investment in the TRB project, and I think I saw that the first $12.5 million went through yesterday, because they're pushing, because their year end's coming up. So, and right now I don't need those funds, but once again, I like the quicker we receive, the better, and then I wanted to get that relationship established and up and running. So was glad to see that. I know Ashley did a lot of this, but there was a lot of work involved in getting set up as a vendor with Amtrak. So with that, and that's,
Steve, that, and it's sort of in the first part of this, and then, it seems to me maybe we want to, in the objectives of the investment policy, considering the interest, particularly among some segments of the board in ES&G investing, in terms of future considerations, maybe emphasize that again, because I suspect what you will hear will be an interest, particularly if we look at credit ratings below AA, that you might also get some interest in excluding certain corporations and corporate bonds from our investment. So just sort of acknowledging that that's very much out there and top of mind for, I think, some of our board members, and
Okay, but
to
if we're
acknowledge that.
driving diesel trains and refusing to invest in fossil fuels, is that our strategy?
Well, exactly, and so, no, and that's precisely. But it's something I think we need to have,
Yeah.
you know, because there are some social and governance, other than environmental. I realize we're in the train business, and we do consume fossil fuels.
that's a great
But
point.
but just recognizing,
Right.
I think, that there is an interest in this, and acknowledging that we're not there yet, but it's something we're happy to keep.
Yeah, agreed,
And
head it
that-
off, yeah, totally
yeah,
agree.
Yeah.
If we
that's-
expand this policy and make a wider range of investments allowable, I think
Right.
it can become a lot more a piece of the decision process. Right now,
Yeah, yeah.
it's not a lot.
Steve, this is the most boring investment policy I've
That-
ever.
that's part-
That is a really good summation. It's totally conservative, no risk.
That's a great endorsement. That is a great
Now, was that-
endorsement.
Did you say
Yeah.
presentation or policy?
No, policy.
That's a great endorsement.
Say the same
Yeah.
thing about the presentation
Yeah.
too.
Well, what's your plan? We talk about, you know, Hussein had a good edit, you know, Deb had a very good point, this whole page of changes. What's the cadence for making changes early on? Are you gonna come back in November with proposed changes, or?
I would probably say it'll be the spring, because it's
Yeah.
it's gonna take us
Yeah.
a little while, just like in the RFP with the contract we have with Wells Fargo, they talk about an investment suite option. And so just knowing how everything's worked so far, it'll take a little time just to work through with Wells Fargo how even, I want to say, administratively to get that up and running. And then, like I said, I'm going to take a conservative approach. So I don't want to, if anything, I'm going to err to the side of sending less money to them and keeping more in LGIP. And I think it's just a matter of us getting our data reporting up and running where we're comfortable. So I can envision maybe by springtime we could start to have that discussion, because we'll have a little bit of history behind us. Because I do think there are some good points that the policy will evolve.
Question on investment income. Is that considered to be a unrestricted revenue to the authority, or it has to be designated back to, say, if it's grant funding and some of the source of income is the cash invested from those, you know, advanced payments towards grant or projects that are restricted?
So
I guess it's an accounting question. Would that
Yeah.
be a revenue, unrestricted revenue for the authority, or
to me,
is that
it's
going to be?
unrestricted, and I guess I don't want to say that's an absolute, because when we issue debt, and
Sure.
if we don't, until we use the debt proceeds, obviously that has to.
Yeah,
any
that's subject to arbitrage.
Yeah,
Yeah,
any
that's-
income
that's-
there's got to tie back. But
Right.
everybody,
Yeah.
all the other revenues we're getting from outside partners, I want to say, not an absolute, but for the time being, they're reimbursement basis.
Gotcha.
So the way we're allocating those sources of revenues, like the priority transportation funds that I think we talked a little bit about earlier that we got, and we're trying to build for more of those for FY21. We're applying those to the right-of-way purchase. So they're, in a way, we're viewing them as like reimbursement of expenditures made, and we're keeping our VPRA funds
Okay.
and that $302 million that came in, because they afford us the most flexibility of keeping them as we talk about excess funding. So,
Yeah.
Same
It was
thing with Amtrak. I told y'all they're saying
Right.
it's $12.5 million. We have a reporting mechanism with them that we have to show them how we spent those funds.
Right.
And they're allowing us to go back, because we've had some expenditures. And then when we get to next quarter, we have to show them how we spent the $12.5 million. And then if we haven't, they're not going to send us another. They're going to short the next $12.5 million. So that prevents us from having to say, okay, we got to keep the Amtrak funds over here. If there's interest there, apply it.
It's a sizable revenue, though, potentially down the road that could actually cover the operating expenses of the authority. If this is, last year was over $2 million of interest income. That's not a small sum.
Yeah, last year, I don't want to use last year as a benchmark.
It was a partial year, by the
I don't know how
way.
closely y'all read the director's report, but I've been trying hard to say it went from 0.4 to 0.05. So
Yeah,
that doesn't seem like a lot, but it's 1/8.
Mhm.
yeah.
So,
Yeah.
and I don't know if you're looking at this year, and we're looking at it, and it's giving me more gray hair, but we're nowhere near that. But I don't
Yeah.
disagree. A slight change,
Yeah.
and it is
Could make a
several
difference.
$1 million that
Yeah.
for us is a big deal. So
Yeah.
that's why this is all important. So.
Any questions, comments to Steve? This is not an action item, right? We don't have to
Not
really
for
make a
the
decision,
committee.
not for the
We
committee.
were trying to avoid action items with the committee.
Great.
So
Or-
it will be for the board later.
For the book,
So
okay. Great, thank you. This was a really work well done, and your insight and feedback from the Treasury as well to come up with a boring policy.
It was good bedtime.
Yeah.
Thank you.
Yes, thank y'all.
Thanks.
We really appreciate y'all being here. And one more thing I'll say too on the budget, the whole point of today's presentation was really we're trying to listen to y'all's feedback. We're trying to involve y'all in the process. So if y'all ponder, if you look these over, feel free to reach out to Shannon or myself and ask information. We'll provide it. And that's the whole goal. Is we want, last year I know we had to do it kind of in a vacuum. We had to do it really fast. And we didn't have the time to have these discussions. So this year we're trying to do a better job with that.
Great, thank you.
Nice.
We have covered the agenda. Are there any comments, questions, reactions to the meeting this
I
morning?
just want to thank you for that uses and sources thing. We talked about that in the spring, and it's great to see it. It's what I'm used to seeing.
Yeah.
Great.
Yeah, and we had that last year. It was just, we're
Yeah.
still doing the agreements. We didn't want to disclose as much at that time, so.
Great. Final word, DJ, you have assembled a great group of colleagues, so we congratulate you for it in such a short period of time to, put the organization together. I'm sure there's another long way to go, but it was a very impressive presentation of your team.
Thank you very much.
Thank you.
Yep, thank
With
y'all.
that, we're officially adjourned. We have enough time before the next meeting to take a break and have
Thank you,
a
Mr.
coffee.
Chairman. Yeah, that's
Thank you.
We appreciate that.